Oregon made national headlines in 2019 by becoming the first state in the country to enact statewide rent control, and the framework has been updated since then. If you manage rental property in Oregon, understanding these rules is absolutely essential, because the penalties for violating them are severe, and the regulations are more detailed than in any other state. The governing law is found in ORS Chapter 90, the Oregon Residential Landlord and Tenant Act, and Senate Bill 611, which took effect in 2025 and replaced the original rent control provisions of Senate Bill 608. Let's start with the most important thing. Oregon caps the amount a landlord can increase rent annually. Under the current framework, the maximum allowable annual rent increase is limited to a percentage calculated using the Consumer Price Index. The formula has evolved since the original 2019 law. Under SB 611, the cap is set at 7% plus the CPI percentage change, or 10%, whichever is lower. This means that even if inflation is high, the total allowable increase cannot exceed 10% in a single year. The Oregon Department of Administrative Services publishes the maximum allowable rent increase percentage each year, and landlords must check the current year's number before implementing any increase. Using last year's number or guessing at the amount can result in an illegal increase that subjects you to penalties. There are important exemptions to the rent cap. The cap does not apply to properties that are 15 years old or newer, measured from the date the certificate of occupancy was first issued. This exemption was designed to encourage new construction by ensuring that developers can set market-rate rents on newer buildings without being subject to the cap. However, once a property reaches the 15-year mark, the rent cap kicks in. Landlords with properties approaching the 15-year threshold need to plan their pricing strategy accordingly. The cap also does not apply to the first tenancy in a unit after it has been newly constructed or substantially renovated. And it does not apply to certain subsidized housing where rents are already regulated by government programs. For properties that are subject to the cap, the landlord can only increase the rent once in any 12-month period. You cannot split a large increase into multiple smaller increases throughout the year. One increase per year is the maximum, and the total amount of that increase cannot exceed the published cap. Now let's talk about the notice requirement, because Oregon has one of the longest rent increase notice periods in the country. Under ORS 90.323, the landlord must provide at least 90 days written notice before a rent increase takes effect. 90 days, 3 full months of advance notice. This applies to all residential tenancies, whether month to month or at the renewal of a fixed-term lease. The notice must be in writing and must include specific information: the amount of the current rent, the amount of the new rent, the percentage of the increase, and the date the increase takes effect. The notice must be served by one of the methods authorized by the statute: personal delivery, first-class mail, or attachment to the main entrance of the tenant's dwelling. If the notice doesn't comply with the 90-day requirement or doesn't contain the required information, the increase is void, and the landlord must start over with a new notice that meets all requirements. Oregon courts and the state's tenant protection agencies scrutinize rent increase notices carefully, and deficient notices are a common reason for increases being invalidated. For fixed-term leases, the rent is locked in for the duration of the lease term unless the lease includes a provision allowing mid-term increases. At renewal, the landlord must provide the 90-day notice of any proposed increase, and the increase must comply with the annual cap. This means the landlord needs to make pricing decisions and deliver the notice well before the lease renewal date, at least 90 days before the new rent would take effect. Here's where Oregon gets even more specific. The state has rules about what happens if a landlord violates the rent cap. If a landlord charges rent above the maximum allowable amount, the tenant can recover the excess rent paid plus damages. The landlord may also face enforcement action from state agencies. Repeated or willful violations can result in additional penalties. Now let's talk about Portland, because the city has its own additional regulations on top of state law. Portland has enacted local ordinances that add requirements beyond the state framework. Portland's Relocation Assistance Ordinance requires landlords to pay relocation assistance to tenants in certain circumstances, including when a rent increase exceeds a specified threshold. Under Portland's rules, if a landlord raises rent by 10% or more within a 12-month period, or by any amount if combined with other qualifying changes, and the tenant chooses to move because of the increase, the landlord may be required to pay relocation assistance equivalent to several months' rent. The relocation assistance requirement creates a significant financial disincentive for large rent increases in Portland, even if the increase would otherwise be within the state cap. A landlord who raises rent by the maximum allowed amount might still owe thousands of dollars in relocation assistance if the tenant decides to leave. This effectively makes large increases more expensive in Portland than the simple math of higher rent would suggest. Portland also has additional notice requirements and disclosure obligations that go beyond state law. Landlords in Portland should use notice forms that comply with both state and local requirements. Other Oregon cities, including Milwaukee, Bend, and several others, have also enacted or considered local tenant protection measures that may include additional rent increase restrictions or relocation assistance requirements. Landlords should check the specific ordinances in every city where they own property. Rent increases cannot be retaliatory. Oregon has a strong anti-retaliation statute under ORS 90.385 that prohibits landlords from raising rent in retaliation for a tenant exercising any right under the Residential Landlord and Tenant Act. Protected activities include making a good faith complaint about habitability, reporting code violations, participating in a tenant's organization, exercising any statutory right or remedy, and testifying in any proceeding related to the landlord's obligations. Oregon's anti-retaliation provision creates a rebuttable presumption of retaliation if the landlord takes adverse action within 6 months of the tenant's protected activity. 6 months is a significant protection window, and any rent increase served within that period after a tenant's complaint carries an automatic presumption of retaliatory motive. The landlord must overcome this presumption by proving that the increase was motivated by legitimate business factors. The consequences of a retaliatory rent increase in Oregon are severe. The tenant can recover up to 6 months' rent in damages, plus attorney's fees and court costs. A finding of retaliation can also invalidate the increase itself and undermine the landlord's credibility in any related legal proceedings. Rent increases also cannot be discriminatory. Under the Federal Fair Housing Act and Oregon's own fair housing law, ORS Chapter 659A, landlords cannot raise rent based on a tenant's race, color, national origin, religion, sex, sexual orientation, gender identity, marital status, familial status, disability, source of income, or status as a victim of domestic violence, sexual assault, or stalking. Oregon's anti-discrimination protections are significantly broader than the Federal Fair Housing Act and include several categories that many other states don't cover. The source of income protection is particularly relevant to rent increases. A landlord cannot raise rent specifically to push out a tenant who receives Section 8 vouchers or other housing assistance. Oregon law explicitly prohibits source of income discrimination, and a rent increase that appears targeted at subsidy recipients can result in a fair housing complaint and significant liability. Oregon's Bureau of Labor and Industries, which handles civil rights enforcement, investigates fair housing complaints and can take enforcement action, including ordering damages, injunctive relief, and civil penalties. From a practical standpoint, Oregon's rental market is concentrated primarily in the Portland metropolitan area and a handful of secondary markets. Portland, including Beaverton, Hillsborough, Gresham, Lake Oswego, and surrounding communities, accounts for the majority of the state's rental housing, and has experienced dramatic rent growth over the past decade. The combination of population influx, limited housing supply, and the state's rent cap has created a dynamic where landlords consistently raise rent by the maximum allowable amount each year. Bend, in Central Oregon, has one of the tightest housing markets in the state, driven by outdoor recreation, remote work migration, and tourism. Rents in Bend have increased substantially, and the market remains competitive despite the state rent cap. Eugene and Salem, the state's second and third largest cities, have rental markets influenced by the University of Oregon and state government respectively. Eugene's market follows student demand patterns, while Salem's is more influenced by government employment and the broader Willamette Valley economy. Medford, Ashland, Corvallis, and smaller Oregon cities each have their own dynamics. Corvallis, home to Oregon State University, has a student-driven market. Ashland, known for the Oregon Shakespeare Festival, has a tourism-influenced market with relatively high rents for a small city. One critical best practice for Oregon landlords: create an annual rent increase calendar for every unit you own. Note the date you need to deliver the 90-day notice for each unit, the maximum allowable increase percentage for the current year, and the anniversary date of the last increase. Because you can only increase rent once every 12 months and must provide 90 days notice, the timing requires careful coordination. Missing a deadline or miscalculating the cap can cost you an entire year of potential revenue increase. Another best practice: track the 15-year exemption status of every property you own. If your property is approaching the 15-year mark from its certificate of occupancy date, your ability to set rent freely will soon be limited by the cap. This may affect your investment decisions, renovation planning, and pricing strategy. For Oregon landlords who participate in the Housing Choice Voucher Program, rent increases must be approved by the local housing authority in addition to complying with the state cap. The housing authority evaluates whether the proposed rent is reasonable by comparing it to comparable unassisted units, and the increase must fall within both the state cap and the housing authority's guidelines. Oregon requires landlords to return the security deposit within 31 days of the tenant vacating. While this doesn't directly regulate rent increases, landlords should understand that a rent increase doesn't automatically entitle them to collect additional security deposit from an existing tenant. Oregon law limits the deposit amount and restricts when additional deposits can be collected. For the complete guide to Oregon rent increase laws, visit tenantscreeningbackgroundcheck.com and subscribe to our channel so you stay compliant in every state.